5 skills for trading financial markets. Number 1, mental strength. Resilience, patience, and trusting in your data. Understanding the way a trading strategy works over a series of trades is critical to long-term success. Every system loses trades from time to time, and to expect anything different is a true sign of an amateur trader. How can you learn mental strength? You can meditate daily. There are multiple ways you can meditate, including calming the mind and clearing all thoughts. Or another way is to go into meditation with a specific question or thought and create pure focus on that concept, allowing answers to freely flow to your mind. There's a number of books in the web page in the link below that might be helpful for you if you're struggling to work this out. The next is to read or listen to Trading in the Zone by Mark Douglas. I listened to Trading in the Zone on repeat many times over until the concepts had really drilled into my mind, because risk management is something we'll come to a little bit later, but it's an extremely important part of trading. And part of that mental strength is knowing that you're going down the right path and doing it the right way. One other thing is intensive physical training combined with strong discipline can have a massive impact on mental resilience. Bodybuilding programs that incorporate nutrition and exercise plans are a great way to develop mental strength as a secondary benefit. The discipline and force required during workouts and eating in line with the training is a very difficult and long-term challenge, and it really relates back to trading in a sense of keeping that disciplined mind frame, a healthy body and mind, so that you can focus clearly on the market and what it's throwing at you. Number 2, data analysis. Knowing your data can help you to understand the expectations of a system and what should be happening, and also what is likely to happen. All of the data, such as max losses in a row, maximum drawdown, daily drawdown, expected return, win rate percentage, should all be known before throwing excessive amounts of money at a trading account or prop firm. Notice how all of these conditions are mostly around drawdown and losses. It's not worried about the profits, because if it is profitable without the drawdown risks being too high, then you don't have to worry, because the system will effectively be going forward. And that's why the main focus is to not go backwards when it comes to risk management. Udemy courses and YouTube searches should provide enough about working with data, and also playing around with Excel spreadsheets will be helpful in working with the number-based data as well. Building your data with your trading strategies by trading on a platform and exporting those results will be a massive help in knowing yourself as a trader. This phase is all about keeping the costs low and accounts small. Get the percentages worked out over a 6 months to 2 years time frame, so that you can clearly assess and analyze your own ideas and processes to improve and understand your trading on a deeper level. To build your data, you need to trade on either a demo account or a small live account, but be aware many demo accounts get deleted after a certain period of time, which makes building data better with a live account. Number 3, risk management. Once you know your system and strategy quite well and have the data to back it up, you can move on to the risk management portion of learning. Trading in the Zone will help you understand the concepts, along with algorithmic trading and backtesting with different risk settings, stops and targets. To learn how risk management affects your trading account, you can figure out your risk settings and see how many losses in a row you would need to destroy your account, and what the effect of different stop losses and percentage risks per trade would be. This is far easier when using an algorithmic trading system, because you can backtest quite quickly using the MQL5 or MT5 strategy tester. Ultimately, risk management is the most important part of trading, because if you can control your losses while making profits, then you can hopefully consistently earn long term. Number 4, research. Technical and fundamental analysis are important parts of trading. Understanding the effect of market conditions on a trading instrument can help gain an edge in the market. Effects can include indicator positioning compared with price, pricing structure, time of day and order flow, through to macroeconomic concepts, news announcements and crises, and the effect on those instruments that you're trading. Continuous learning across courses, textbooks, YouTube, but be specific on topics rather than looking at influencer hype, and then learning how to use the platform you want to use, and also coding and testing what works and what doesn't. Coding is a really useful skill because many of the trading platforms incorporate some form of coding, and if your strategy and method of trading is a consistent framework and thought process that could be coded, it would be much easier to actually code it into an algorithm rather than use your time to manually watch the charts all day. Finally, bringing it all together. You don't need huge returns to do well in trading on a percentage basis. If you can gain a consistent edge in the market and gradually gain a return most months with limited drawdowns, the mathematical framework of trading can bring great benefits and offer a vehicle for you to utilize well into retirement. There are often ways you can access funds, capital, and ways to profit from trading. So rather than focus on the money, it's important to focus on getting the percentage returns consistent and sustainable. Trading doesn't come without hard work, resilience, and discipline. For those starting young, even spending 20 or 30 years would be worth it to work on this alongside whatever it is that you do for a living, because you will have a financial vehicle you can utilize that is quite difficult to be taken away from you. This means a level of freedom and ability to generate income from a skill that you've developed over some time that doesn't require physical input or labor, and you're using your skills in a computer and the internet to be able to access financial markets to earn a return. For the latest concepts and courses on these trading skills, head to the website in the link below and check out what's current and available. If you enjoyed this video or took something positive from it, please hit the like button below. It lets me know this is helping others. To see more great content like this, please subscribe, hit the bell icon, and stay updated with the latest.